Hey there, hold on tight because we're diving into the bewildering world of China's recent actions and how they might shake up the global financial system. The US dollar has long reigned as the dominant reserve currency, but things are getting impetuous. China, one of the biggest holders of US dollars, has been on a spree to reduce its dollar reserves. Can you believe it? Get ready to explore the thrilling reasons behind China's move and the potential consequences for the US dollar's coveted status. Why in the world is China slashing its US dollar holdings? Well, it seems like China wants to challenge the all-powerful US dollar's dominance in the global economy. With tensions between the US and China heating up, China is deliberately lowering its government bond stash to take on dollar hegemony. And that's not all. There are more mind-boggling factors at play here. Geopolitical tensions between the two countries, exacerbated by the trade war and other issues, are pushing China to act. China is also worried that the US might use its dollar control as a weapon, freezing Chinese assets or limiting its financial access. Talk about a wild ride. But wait, there's more. China has serious concerns about the long-term sustainability of US fiscal and monetary policies. The country is fretting over the US's mounting debt levels, fearing a future debt crisis that could unleash inflation or plummet the dollar's value. And guess what? China wants to make a grand entrance onto the international stage with its currency, the renminbi. It dreams of the renminbi challenging the US dollar's supremacy as the global reserve currency. Buckle up because China is revving up its efforts to internationalize the renminbi, forging economic ties with none other than Russia. Hold your breath because China's holdings of US Treasury bonds have hit a record low in over a decade. According to the Center for International Finance, China's ownership has plummeted, reaching a level not seen since 2010. The decline began during the US-China trade war in 2017 and has been gaining speed ever since. China's holdings of US Treasuries nosedived by a whopping 17.5% in February 2022 compared to the previous year. And they aren't alone in this game. Major countries like China, Japan, and Korea are selling US Treasury bonds to shield their currencies from the mighty US dollar's impact caused by the US Federal Reserve System's tight policies. It's like a reverse exchange rate war, throwing the financial world into confusion. But hold on, don't lose hope just yet. Recent reports suggest that the need for central banks to intervene in the foreign exchange market has decreased as the US dollar's strength has waned this year. There's even speculation that the Federal Reserve System's interest rate hike will soon come to an end. So, the balance of US Treasury holdings in major countries has started an upward climb since November last year, as indicated by the Treasury International Capital. Phew, what a roller coaster! Amidst all this chaos, China is charting its own course. The Chinese government is steering away from US dollar assets and government bonds, determined to diversify its portfolio and propel the renminbi into the spotlight. This stance is becoming more apparent as the global economic bloc reshapes itself, with supply chains reorganizing around allies in the aftermath of the Russia-Ukraine war. The impact of this trend on global markets remains an enigma, especially with the US dollar's unwavering strength. Hold your breath again. The United States has slapped sanctions on China, particularly targeting the semiconductor industry. In response, China is rumored to be selling US Treasury bonds. According to experts, the Chinese state-run media, the Global Times, boldly declares that China is reducing its holdings of US Treasuries to strengthen its long-term economic and financial security. The People's Bank of China, China's central bank, is also cutting back on the US dollar and its foreign exchange reserves and advocating for greater diversification. The US dollar's share in China's foreign exchange reserves has been dwindling, falling from 79% in 1995 to 58% in 2017, which is even lower than the global average. Analysts believe that this figure may have plummeted further. What a twist! And the plot thickens. China's reduction in US Treasury bond holdings seems to be connected to the surge in Yuan payments following the Russia-Ukraine war. China is pushing forward with the Yuan internationalization agenda, with payments made in Yuan through the cross-border Yuan payment system, CIPS, skyrocketing. Just look at Brazil. They've made a pro-China move, conducting large-scale trade and financial transactions directly in their own currencies, the Brazilian real and the renminbi. Brazilian companies are even shunning the dollar settlement network known as SWIFT in favor of the cross-border Yuan payment system. It's a whirlwind of shifting preferences, and it's all adding to China's efforts to diversify its financial prowess and reduce its reliance on the US dollar. Now, brace yourself for the long-term impact on the US dollar. There's growing concern that China's sell-off of US treasuries could deal a massive blow to the US dollar's dominance as the world's reserve currency if more countries follow suit, reducing their US treasury holdings and diversifying their reserves. It could weaken the dollar's grip on the global stage. This isn't just any run-of-the-mill scenario. The potential weakening of the dollar could send shockwaves through the global economy. The US has enjoyed the privilege of printing money and borrowing at low interest rates thanks to the dollar's supremacy. But if that starts to crumble, get ready for higher interest rates and inflation in the US. And hold on tight because the balance of power in the global economy could shift, with China and Russia flexing their muscles and gaining influence. To wrap it all up, the US and China are economic powerhouses, and any major changes in their relationship have ripple effects on the global economy. As China continues diversifying its holdings and pushing for the renminbi's international use, we might witness a transformation in the balance of power. The future of the US dollar and the global economy is hanging in the balance. What do you think lies ahead? Write your opinion in the comments.
Thanks for watching. If you found this video helpful, please consider subscribing for more content. Take care.